Hey folks, David Fleming here from the Toronto Realty Blog, and I am going to sit down and do an interview with your friend, my friend, Ben Rabbidoux, the founder of Edge Analytics. We're going to put this into two parts, of course, because Ben is very verbose. No, that's me. But yes, we're going to chat. I'm going to put the first half up on the blog here on Monday. We'll return later on Thursday. We're going to cover a lot of topics, not just about real estate. Got to talk about the economy. We have to talk about Donald Trump and tariffs and taxes. We're going to talk about housing supply, housing demand. We're going to talk about how the government apparently is going to get more housing built. Ben's thoughts on taxes, which he always says, don't hate me. David, don't hate me for saying this. Yeah, you'll want to see that bit. And of course, we're going to talk about, are you ready for this? The pre-construction condo apocalypse, which I had nothing to do with because I haven't sold a pre-construction condo in 21 years. And Ben and I called this whole thing years ago. Away we go, folks. Hope you enjoy. All right, Ben, are you there?
I'm here.
Hey,
how are you, Dave?
Hi, man.
Good. How about you?
We were just chatting offline about that. It's tricky out there, and obviously much made of the condo market. But as I said to you, the freehold market, not what it was, let's say, a couple of months ago. So probably get into that. If I could start with some stuff that maybe we coulda, woulda, shoulda covered a few months ago. The Trump and tariffs. I feel like everyone out there is going to want to know your take on this. And I think we chatted a few months ago and we were like, hey, should we talk about this? And it's changing rapidly every day. Like, we've kind of come to realize that this is just sort of the way we're going to live for the next 4 years or longer. ... Can I get your post-mortem on everything that happened a couple months ago?
Yeah, well, the post-mortem is, it's still very much in flux. So much so that the Bank of Canada, who's, one of their primary jobs is to do economic forecasting and modeling, they basically threw their hands up in the air in their latest monetary policy report, and they're like, we don't have a clue, but we'll lay out some potential scenarios. And so, if you kind of defer to them on some of this, there was two main takeaways. The first is that the set of tariffs that we have in place, which is primarily related to aluminum and steel and some kind of non-compliant auto products, is effectively a non-issue. I don't mean to say that, like, that's going to obviously be a big issue if you're in the Hamiltons of the world or certain parts of Quebec, but from a national kind of economic perspective, it's really a non-issue. They're projecting basically 1/4 of flat GDP, and then we get back to the races in Q3. However, where it gets a little more problematic is if in fact we end up with like a base tariff, which is what people were expecting. Remember that at one point we thought that we might have a 25% base tariff?
Yeah.
And had that come in, we would have been looking at somewhere around a 4 to 5 percentage point cumulative decline in GDP, which is about on par with what we saw during the financial crisis. So like a really meaningful impact to the economy.
That's a recession, right?
Oh, that is a deep recession. Yeah, that's a real problem. Now, what they're forecasting is if we end up with somewhere around like a 12% base tariff on what's called a trade-weighted basis, so you kind of average it across everything that we sell, they're projecting that we end up with 4 quarters of declining GDP, which is a recession, and a cumulative kind of like 1.5 percentage point decline, which is certainly a recession, but is a much more muted recession than anything we've seen since like the 1970s. So like not disastrous. Like you go through a year of pretty soft growth. There's definitely would be job losses. It'll cause a rethinking of how we structure the economy, but not disastrous. So we're kind of in this limbo where we're sort of waiting to see what's going to happen. But I think I'm cautiously optimistic that, I would say that the reaction to the tariffs was so extreme from a sentiment and confidence perspective that it was almost unbelievable. Right? Like I think I shared this with you. Like the confidence readings for the consumer confidence hit the lowest on record in March of this year, on record. So that is lower than the initial days of the pandemic when we locked everything down and we thought half the world might die for all we know. Lower than then, and lower than during the financial crisis when we thought legitimately that the financial system might just break down and we'd be back to like bartering with each other. Like lower than that. Like that to me is overreaction of the extreme. And it was the same thing on the business side.
Yeah.
So that was an overreaction. The problem with sentiment is perception becomes reality in that, as you're experiencing, once people lose confidence, they stop making big ticket purchases. Once businesses lose confidence, they stop hiring, they stop investing. So my high level takeaway is if we get that base tariff that's somewhere in the 10% range, it's not fun, but it's manageable, right? It'll be a recession, but a milder recession than anyone has lived through in 50 years. Um, but the impact on the sentiment and what we're feeling today with this incredibly weak consumer and business confidence, that in my mind is actually the bigger driver of the economic weakness that I think we're going to see through the summer.
Okay. I mean, I agree with all that. I think the overreaction is what stands out to me, and I think that a lot of it just had to do with partisan politics. Is that, and listen, I'm not a Trump fan by any stretch, but anything he was going to do was going to get the reaction, especially with all the fanfare that was coming. So, I mean, I'm like you. I guess I thought best case scenario, we have a mild reduction in GDP. People want to use the word recession. Fine. Interesting point though about confidence, because what I'm seeing right now, the fear of missing out that drove the market in 2018 to 2022, let's say the condo market specifically, I always used to say, like, what's more powerful, fear of missing out or fear of losing out? And right now, what I'm seeing is that, fortune favors the bold. We know that. But I find that first time home buyers, some of them, yeah, they're getting into the market. A lot of them don't want anything to do with it. But I feel like, what did Mike Myers say in Saturday Night Live? Denial ain't just a river in Egypt. These guys know right now that it's scary to buy, but they're all convincing themselves that they can buy in a year or two and pay the same price. It is complete denial. Now's the opportunity for somebody to buy a house for 1.1 that might have cost 1.2 last year. They're scared, they're not doing it. And I think that they're going to convince themselves when they do eventually buy that, it's a zero-sum game. But yeah, I think confidence is super low. And then that plays into thoughts about the election. Maybe we'll try not to get too political here because you and I both have a habit.
Hey, elbows up, man, elbows up.
Okay, so the Conservatives lost.
Yeah.
Great article that I read and wrote about on my blog in the National Post. It wasn't that Pierre blew it, as everyone said. He got exactly the votes he thought he was going to get. Jagmeet blew it because all of those votes went to the Liberals. So
Yep, and the bloc as well in Quebec. Yeah,
Yeah.
it's hard to overcome that much of an implosion. Yeah.
Right. And so history will show that Pierre Poilievre blew the biggest lead. He was up by 20 points, and we all heard about it. And in the end, all of the Bloc and the NDP votes went to the Liberals, and they won. So here we are.
Yeah, well, it was the highest share of the popular vote since Mulrooney won his majority back in the late 80s, I believe. So it was, hey, listen, before we get on to the election stuff, I actually want to, can I backtrack for a moment and sort of bookend that discussion around tariffs? Because this is going to be a little bit unlike me, but, I actually think this is long term, this is going to be a really good thing for Canada.
Oh, there's a bold take.
I really do think so.
There.
So, yeah, I mean, so a couple thoughts on the tariffs. They're forcing a fundamental realignment that's been long overdue. There's money that's just sitting on the floor in Canada that we can't pick up because no one can kind of get over themselves to pull in the right direction. So what do I mean by that? It's like we've got internal trade barriers that prohibit the free flow of goods and services across provincial boundaries. And we've known it's been an issue for decades. But the provinces just can't seem to get together and sort of like figure out a way to just agree on some common principles. Yeah. And if they were to do that, there's evidence that alone could add somewhere on the order of $200 billion to Canada's GDP. You're talking about like a 7-8% hit. So on one hand, and when I say hit, I mean an increase, a boost of 7-8%. Just from reducing those internal frictions. So on one hand, we're fretting over like this potential kind of 1.5 percentage point decline in GDP if we get a 10% base tariff. And meanwhile, there's free money on the ground that's the equivalent of somewhere like 7-8% of GDP. I think that's when we rewrite this, if the provinces can coalesce and get together on this is a net benefit for Canada because it's sort of forced us into action. The second thing it's going to do is, for the first time in my life anyways, you're seeing like broad support for trying to broaden our export base, particularly related to the energy sector.
Well,
and so you're getting,
well,
but this is the first time we're seeing some agreement that, we need to diversify. We need to get pipelines built. We need LNG. There actually is a business case, it turns out, for LNG, like all this stuff that, I think in time, there is a chance, I think a pretty good chance that we will look back on this as being the catalyst that forced the change that we could never sort of seem to get the incentive to sort of do ourselves.
But isn't that sad? Like, listen, I'm somebody watching this right now probably is happy that we banned plastic straws. I don't care, right? I will go on. I'll put my thoughts out there. I don't care. But as far as the just kind of patheticness, if that's a word, of the fact that in order for us as a country to get our act together, we needed chaos. We needed Donald Trump to come and blow up the. So you're saying now we're going to get our act together. You said decades, internal trade barriers, money on the floor. And don't even get me started about the fact that we could be so self-sufficient from natural resources that you have this large population of the country that believes that we are responsible to solve global climate change. So we'll just stop. We'll just stop with our natural resources, and then we can import it from other countries, become self-reliant on them. Honestly, like I'm 44, man. I get it. People could. I'm in sales. People could watch this, hate it. They could see my comments on Toronto Realty Blog. I don't care anymore. I get it. Some people are highly concerned about climate change and the earth. I'm a realist. I'm a realist. I cannot believe what we have done. We have so many natural resources in this country, and we're shutting it all down. We've got what's his name? Stephen, but the like
Bilbo.
right, doesn't want to build any new roads. Doesn't want to
Yeah.
build any new roads. This is
Yeah.
what we're doing as a country. And I don't, it's from Trudeau. I get it. Sorry, I said I wasn't gonna go off on blast, but like you see, you hit, I was pretty calm until you mentioned that.
But I'm saying it's going to be a good thing. And what I guess I'm trying to get at is like I think we're finally at the point where people want to be pragmatic around some of this stuff.
No,
Yeah, I know. And
really?
look, I'm cautiously optimistic. I was deeply skeptical about Carney around some of his, prior work on values and the push for net zero and all the stuff that he seems to have abandoned because it's politically expedient. But we'll see. But it does feel like there's more of a pragmatic approach. I mean, you're finally getting to the recognition where everyone goes, hey, wait a minute. There's massive demand for LNG globally.
Yeah.
And if we can get our LNG to some of these countries, first, second world countries that are still primarily reliant on coal, and that switch over from coal to natural gas is relatively seamless. And if we just did that and got some countries away from coal and towards LNG, we will offset more carbon than Canada can ever produce. Right. So it's like from a global perspective, it makes enormous sense to get that LNG to international markets, and it ends up being a net benefit for our economy. So like, what are we doing? So finally, I feel like, we're getting progress on that.
I mean, I'm gonna stop there because if I
Yeah, I agree. I agree. Let's get on to housing.
if I talk anymore, I'm going to sound like an anti-climate change zealot or something like that. No, I think it's important. I just think pragmatic is the word you used, and it's like maybe we shouldn't be throwing cans of paint at the Mona Lisa in protest of global climate change. Like, okay, so let me go back to the elections here. Like, we've got Mark Carney. Fine, it is what it is. I think Pierre had some ideas. The other candidates had ideas, but none of them matter because they never had a hope. I don't know why the Green Party even advances a platform. I'd love to know what would the Green Party do to advance the Canadian economy. So what are the implications, the high level, big implications, especially as it pertains to housing? I'm a cynic of the mindset that the public sector is so incredibly inefficient. If you gave the public sector $1 and it went through the filter of government, they're going to crap out 30 cents. So the government wants to build housing. They want to get back to the 1950s. Where is this headed?
Yeah. Okay. So a few high level takeaways. So, okay, all else equal. Um, so you're not going to agree with me at first pass, but hear me out. A
Okay.
Carney government is going to be better for economic growth in the near term because they're willing to run larger deficits. And deficits are stimulatory in the near term. They just are. You can't get around it. And
What
so,
about the ones that go on forever in
well,
perpetuity?
that's a separate discussion. The longer term implications is a different discussion. But if we're talking about the next year or two,
Yeah.
look, Polyever, there was a chance we could be looking at something like a Doge Light, like a Doge North, which arguably is overdue because the share of the public sector as a percentage of the total labor force is the highest it's been in 30, 40 years.
Yeah.
So you can certainly make the argument that we need to trim things up. That likely would have happened under Polyever. Now, the problem with that, the problem, as it were, is that is a constraint on growth in the near term. Over the long term, it's a different discussion. A Carney government is definitely more pro-growth in the near term, no, without question. The flip side to that is that it also means that rates are going to stay slightly higher under Carney than it would have under Poilievre because the government, in an economic downturn like we're likely facing, a Carney government will be more willing to underpin growth through spending than a conservative government might have been. And so that gives leeway to the Bank of Canada, or it relieves them from the obligation of trying to underpin the economy through lower rates. So all else equal, you're going to get slightly higher growth, slightly higher rates under Carney. I know you're going to disagree. I'm just telling you in the short term, that to me, that's a no-brainer.
Yeah.
You're also going to get slightly stronger population growth, I think.
Okay.
I think there was the potential that a conservative government would have really tightened the tabs.
Yeah.
We can debate whether that's a good or bad thing. I personally think we need to, a bit of an overhaul on the way we've thought about immigration over the last few years.
Yeah.
Around the specifically like incentivizing new construction, I think they were broadly similar. Like I would argue that the Liberal platform kind of just waited for what the Conservative was going to say, and then they kind of like, oh yeah, we like that. Which, whatever, to their credit, that's how the game is played. You find the policies that are popular and you adopt them. And so I don't think there's much different from that perspective. The only other thing I would say is I do think that there was a chance that under a Conservative government they may have sort of rolled back some of the changes under CMHC that we saw under the last government with
Yeah.
regards to $1.5 million insurance cap on purchases. I just got the sense that was something that they maybe were not super like big fans of, and I could have seen a scenario where that was back on the table for being rolled back, and that's clearly not going to be the case under Carney. So I think all else equal, it's probably slightly better for growth, slightly better for housing over the near term. I think over the longer term, I was a big Pierre fan. I know him personally. I was pulling for him hard. I thought he had the better platform for the longer term, but
Yeah.
that's where we are.
So, okay, as it pertains to housing, we keep hearing everyone wants to talk about building housing. So again, I go back 10 years and I feel like I don't want to toot my own horn, but I was ahead of maybe a couple of things. The demand, that's all the CMHC ever looked at was demand. Everything to quote, cool the housing market was let's increase CMHC premiums. Let's increase down payment minimums. Let's, right across the board, make it more difficult for people to buy because if we can eliminate demand, then we can stop housing prices. I started saying 10, 15 years ago, what about the other half, supply? 5 years ago, maybe 4, 3, I don't know. It's been very recent. The government has finally started to talk about supply, and now it's all they talk about to the point where I think it's absolute nonsense. I want to get your thoughts on what can the federal government actually do to increase supply? And because we know that the bottleneck is at the municipal level, and I've told so many stories, both off camera, things I can't really mention about local city councilors shutting down developments because their residents don't want it. The bottleneck is at the municipal level. We've heard about the government, quote, working with the municipalities, and we've also heard ideas on how to punish them. What do you think the government can do to get housing built, and how can they work with the municipalities and maybe the province, because Doug Ford wants to build, like Dr. Evil, 1 billion houses?
Yeah, they were sort of in broad agreement that there was sort of underutilized federal lands that could be turned over to development, and so that was a kind of across party lines.
Okay.
That's going to move the needle a little bit. Like, you know, with this housing thing, there's no silver bullet, right? It's just going to be a lot of targeted, smaller measures that over time are going to move the needle. And so, like, that's one you can say, okay, yeah, that's going to move it a little. I agree with you 100%. The issues at the municipal level, the feds have got to find a way to incentivize municipalities to become more pro-development. And they've had different approaches to it, but in general, the approaches have sort of fallen along the lines of like, sticks and carrots. And
Yeah.
with the idea being that, we're going to try to tie various forms of funding to
Yeah.
targets around development. Like, it's hard to know. I think at least I'm encouraged that they recognize that is the pinch point, and they're sort of trying to figure out how to get municipalities to pull in that direction. And so that, the Carney government promised they were going to cut municipal like development charges in half.
But how can the federal government stop the municipality from charging what they want?
So, I don't know. I don't know. We're going to get more of these details in the next budget, but I could see, I don't know whether it's going to be some sort of literally just like a slush fund where they offset some of the lost. Like, I don't know what it's going to look like. But no one wants to say it in Canada, but the reality is that property taxes are relatively, okay, everyone's going to hate this, and I get shit on every time I say it,
Yeah.
but just pull up the mill rates in any US city and in any European city and compare it to Canadian cities, especially like the Vancouvers and the Torontos. And everyone goes, my property taxes are super high. Yeah, they're high on an absolute basis, but in terms of the mill rate percentage, they're not high.
Sure.
They're not high. They're very
Toronto's the lowest of anywhere.
It's crazy low. And so the idea that we are subsidizing existing owners by keeping property taxes low and then putting that tax burden on new development
Yeah.
is completely ass backwards. And all that you're doing is you're enriching the incumbents who already own those assets. And that's fucked up. And we got to figure out a way to like change that taxing dynamic. But good luck getting elected on that platform.
No, but it's the same thing with, I don't want to move on from that point, but the comments last week from Gregor Robertson saying that, we can't allow home prices to fall. My argument on my blog was, why would anyone be surprised by this? The Liberals were elected by seniors who own houses, who have the biggest share of equity of anybody in the planet. Why did anyone think they were going to let or force home prices to fall? But I'd be remiss if I didn't circle back and say that, well, yes, our property taxes are low. We're taxed to death on everything else. I can't buy a
100% agree.
TV without being charged an environmental fee, making the assumption I'm getting rid of an old TV,
Yep.
53% in taxes. And when you said slush fund earlier, you know me, when it comes to economics, I think that the average person doesn't understand. Free is not free. Free dental care, free daycare, free everything. It's not free. It's paid for by tax dollars. So when there's a quote slush fund, it's made up of tax dollars.
Yep.
The government can't subsidize everything. I remain convinced that 90% of people, I don't even want to label, Gen Z or what have you. 90% of people don't understand, quote, the government can't just go and pay for stuff. It comes from tax dollars. So, what's the solution? I mean, stop spending money on stupid stuff, be more efficient, have fewer government jobs.
100% agree.
I
I'm not
don't,
in favor of, listen, I'm not, I pay taxes like everybody else.
yeah,
I have zero interest to see my taxes go up. But if we're talking
I know.
about somehow finding a more equitable way to redistribute it, the idea of having your current incumbents sitting on massive pile
No,
of
you're right.
housing equity, including myself,
Yeah,
I count myself among that group, that
yeah,
somehow we're passing that burden onto the younger generation that's trying to get into the market it's just not right. So I'm not an advocate for higher taxation. We waste
yeah,
so much money at the federal level. It's insane. And so I'm completely in favor of seeing a rethinking of our spending first,
yeah.
such that we can get some of those taxes lower and incentivize development.
So then where are you seeing housing supply? Like we've talked a lot about, housing starts, pre-construction, which we'll get into in a moment because that's a sexy topic. But in terms of, resale, obviously we know the absorption rate is near all-time lows. I believe in the condo market where I look in the condo market, so specifically C1, C8, rental market is soft, absorption rates lower. GTA and 905 condo market absorption rates at like 25%. So anything less than 50%, people know signals a buyer's market. We're at 25%. The absorption rate in the overall market is hovering around 30. So
Yeah.
resale, okay, it looks like there's such little demand that the supply is fine, but new housing, I don't have those stats. I always go to you for that. Where are we on housing starts and housing completions?
Yeah, it's this weird time. It almost feels like that kind of Wile E. Coyote moment where, the coyote's gone over the edge, right? And the coyote being home, like new housing construction.
Yeah,
But the resale market still looks very well supplied. And so it's
yeah,
this weird dynamic. I agree with you. Like if you look at something, just to frame it for the listeners, so something like the sales to new listings ratio, which you refer
yeah,
to as absorption. So just a simple measure of supply and demand. We're at levels currently that we have not seen since the early 1990s.
yeah,
Now that's lower than during COVID. That's lower than during the financial crisis. So like
yeah,
you're right. This is just an absurdly weak market.
yeah,
Um, the problem, and so because of that, you're getting an accumulation of inventory, and it looks like the market's well supplied. What I'm a little bit concerned about is when I look at the trend in new construction. So I'll use, for example, single family building permits. Of course, you have to get a permit from the municipality before you can start construction. So it's a pretty good leading indicator for where development and construction activity is going. Permits are at 40-year lows in Ontario. If you just
wow,
look at them on like a 12-month rolling basis, we have not been this low since the 80s. And in BC, we have no precedent. Like we have data going back to 1980. It's never been this low. That's single family.
yeah,
And so I think you could get into a situation. I wouldn't be shocked if a year from now the single family market is definitively improving. Sales are probably still going to be weak, but better than currently. But the inventory might start to really normalize come next year.
okay,
Little different situation in the condo market. There's still a lot of new supply still to come. If you look at what's currently under construction, we probably have one more year of record high deliveries, and then they start to kind of taper off once you get kind of towards the back half of 26. Where it gets interesting though is if you look at new condo sales,
yeah,
and here I'm leaning on data from I think it's Altus. It's reported by Build, which is the industry group. And on a 12-month rolling basis, like we've only seen 3,600 new condos sold in the last 12 months.
Yeah.
So there's this great chart where if you look at condo starts versus new condo sales, starts lag by about 18 months, which makes sense because developers have to pre-sell units, go get their financing, start building. And that's about
Yeah.
an 18 month process. So in other words, with new condo sales running at sub 4,000, you can pretty much pencil in that 18 months from now, condo starts will be in that same range.
Mhm.
Now, just for context, at peak 2 years ago, we were looking at 36, 37,000 new condo sales.
Right.
So we're talking about like a 90+% reduction. Now, you roll that forward further. So we're talking 18 months from now, starts will be down sub 4,000. Roll that forward a couple more years. So now you're getting into like 28, 29, maybe even into 2030. That's going to be the level of completions in the new condo market. So we're going to be looking at sub 4,000 completions. Now, for context, even in a really weak market like we have currently, we've still had like 16, 17,000 condo sales in the resale market in the last 12 months in Toronto.
Hmm.
So that you can kind of get a sense of the discrepancy there between future supply. Now, there's not a story for a couple of years, but it's going to be other, but that future supply being dramatically curtailed, um, such that I think that market's going to be quite undersupplied, but that's not going to be a story for at
Years.
least 3 or 4 years. The market's going to recover before that,
Yeah.
right? But I wouldn't be surprised if a year from now, like I said, I think the single family market next year at this time would probably be firmer. I think
Yeah.
almost certainly.
Yeah.
I would not be surprised if the condo market still looks really soft. I think you got another at least year or 18 months where this market, the direction for condo prices is probably down. And the big unknown in all this is going to be the employment situation. If the wheels
Mhm.
come off in employment, then that's really going to drive for sales, and you could really start to see prices come under pressure. But barring that, I think if we get just a kind of run-of-the-mill modest recession, a couple quarters, and we're back to job growth by the end of the year type thing. I think by spring of next year, the single family market is going to look quite a bit different.
And so, just speaking of sales, so we're talking about obviously housing supply, the other half of that sales. I made a lot in 2023 the fact that I always say of all time, here's where it gets tricky. The stats for TRB start at 2002. And my argument is also, well, hey, the city was half the size in 1999. So when I say
Mhm,
of all
mhm.
time on my blog, 2023 lowest sales of all time, they were a little more than half of the peak in 2021. So you had around 122,000 sales in TRB, and that went down to about 67,000. Last year, 2024, was moderately more than 2023. So we're talking 66, 67,000 sales. I came into this year, I ran this contest on Toronto Realty Blog, prediction based. I had like 40 people submit, which was great. The average number of sales, which was one of the questions, right? The average prediction among 30 something odd readers was around 78,000. We're all going to be wrong. I think we are going to see less than 60,000 sales this year, which is
Mm,
mind blowing. And so
yeah.
I've run the data basically through, April, which is only 4 months, but risk like grading on a curve to previous cycles. If you look at where we are, Jan, Feb, March, April, as an average in relation to kind of a rolling average of the last few years, I'm looking at 57, 58,000 sales, which is crazy to me. Not just the lowest of all time, but way, way below what we saw in 2023, 2024. So, I mean, I've kind of answered this, and obviously I'm the one that's selling real estate out there, but like, why do you think we're seeing fewer sales? I mean, interest rates are being cut. Like,
Mhm.
what is it? Is it panic? Is it media? Like, what's your view on that?
Well, so I mean, I look at it. So I generally look at the same data you're looking at. So when I look at sales on a per capita basis, we are at the lows that we haven't seen in 30 years. So you're
Yeah.
right. Sales are just unbelievably low. Um, and have been now for a couple of years. Now, you got to remember that coming out of COVID, we went through a 2 year period where they were exceptionally high. So some of that weakness we've seen is sort of a payback from where we clearly pulled some demand forward.
Yeah.
But we're way beyond that now. Like we're to the point now where sales have been so low for so long that we're clearly there's an element of pent up demand building.
Mhm.
And it's hard to know what's going to get that to unleash. So I have a view that I actually think home sales, adjusted for seasonality, probably bottomed in Q1.
Wow.
And that, yeah. And the reason for that is, um, so you look at, okay, so let's talk affordability. I think that everyone knows, well, housing is really unaffordable.
Yeah.
We get that. Okay. So if I look at something like, okay, so a simple calculation I do is, okay, let's take the typical house in Toronto and you use something like the house price index benchmark price, just
Yeah.
as a proxy. Okay.
Yeah.
And you do a simple analysis of like, well, what's my monthly mortgage payment if I buy that house, finance it at 80% loan to value at current rates? What's my monthly mortgage payment? And so you saw from kind of 2016 to 2020, it was actually surprisingly flat. That as house prices were going up, it was being offset by falling rates.
Yeah.
Then, of course, pandemic hit, and then we had this insane run up in prices coming out of the pandemic, and then rates started going. And so it looks like a hockey stick, but it's rolled back over quite a bit. And what's interesting is where rates are currently, the monthly mortgage payment is back to levels that we last saw in the first quarter 2022.
Hmm.
And if the Bank of Canada cuts one more time in June, which I think is right now, markets are saying kind of 30% odds, but I think it's probably higher than that. I'm expecting a cut in June.
Yeah.
That'll put us back to levels that we were at in the fourth quarter of 2021. Now, for context, sales in the fourth quarter of 2021 were 50% higher than currently, 50.
That was the record year, 2021.
Yeah, well, even you go into the first quarter of 2022,
Yeah.
we're still talking 15, 20, 25% higher than currently.
Yeah.
So it's not that affordability was shitty back then. It's still shitty today, but sales were dramatically higher back then than they are today.
Yeah.
Right. So what is it? Well, I think there's two things driving it. The first is, which we discussed, is confidence. You need confidence to come back. Now, one thing to note is in the last 3 weeks, we've seen a dramatic rebound in the weekly confidence readings. In fact, it's the steepest 3-week increase since we've seen since coming out of the lockdowns and COVID. So we're seeing sentiment is improving. I think that will start to translate into slightly higher sales, but we're not getting back to those kind of like those highs from 2021 and early 2022 because the investor market is dead, as you know. Like the investors were 30 to 40% of the buying pool back in 2021, 2022.
Yeah.
They basically round to zero today. And of course, why wouldn't they when you've got, the rental market is pretty soft, prices are going against you, cap rates still don't, like, it's really hard to carry unless you're willing to put a lot down.
Yeah.
So it's still, from an investor perspective, it still doesn't make sense. And so I think you will see end users start to re-engage. And so there will be an upward drift in sales through the year, but we're not getting anywhere close to being back to those key levels or those highs for a couple of years because you need those investors to re-engage. And that's going to be a long process, I think.
Okay. Yeah. I mean, I think it all goes back to the confidence. That's what I'm feeling out there. Like I said, don't want to say I'm repetitive, but the fear of missing out drove the market a few years ago, and people are just so afraid. I've had a few people reach out. I had an investor reach out, a guy I've been talking to off and on for years. He said, what's happening with condo prices? He said, can I get a 2-bedroom for under 500K? And I was like, no, I mean, if you want to go to Joe Schuster Way, not the best building, forget about, Abel and Lisgar, the people that are from Toronto know what I'm talking about. And I said, yeah, maybe around 500. And he said, you know what? I think it's going to drop further. I'll reach out in 6 months. So yeah, listen, if you're a long-term investor and you're looking for 20 years, I don't know that it matters whether it's today or 6 months from now, but I feel like the sentiment out there, even among the investors and specifically with the end users, like imagine being a 25-year-old and you're thinking about, okay, I've been in my job at a law firm for 3 years. I'm going to go buy a downtown condo. You are scared beyond belief that if you go buy something for 520 that was trading for 640 in 2022, well, you're going to look like an idiot because your cubicle mate's going to pay 470 for the same thing. So I would remind people, I don't want to sound salesy, but it's an investment, yeah, but you're still living there. So if you want to move out with your parents, or get out of the rental or whatever it is, or you want to buy that really great condo in King West with your nice terrace. Now I'm really selling it. But, I think people get too involved in the investment aspect when of course it is for use. Folks, I think we're going to pause right there because we've got a lot of really good stuff to save for Thursday when I'll meet you right back here for the second half of my interview with Ben Rabidoux.